Hello, Jarrett Lau with Profitable Properties Boston. Today's video, I'm going to talk all about financing and getting you the money that's necessary to be able to buy that property. In this video, I'm going to talk about 3 different ways. There's tons of ways. Maybe you'll find a pot of gold at the end of the rainbow, but the most typical common ways are either a typical bank, right? You're going to go into your Citizens, your Bank of America, maybe a small local bank, and you're going to be able to apply through either your banker, or they might even have a specialized mortgage originator that you're going to talk with. They have a process that they obviously go through. They only finance through the bank. That means the bank will loan the money to you. When you pay that interest, that's how they make the money, and then they loan that money, back to someone else, right? That's just a process that they have. I find that banks, depending upon how big they are, some Bank of Americas, the commercial ones, can be a little bit tougher, a little bit more stringent upon what they're looking for. The relationship isn't there as much. I love using local banks where I can talk to the person, I know them, they have my accounts, I've built that relationship. Sometimes even a bank isn't the best place to go for you. You might look for an independent mortgage company, and when I mean that, you have things like Fairway, or we personally, work with someone from Guaranteed Rate. That's fantastic. Now, these people have their own teams, they have different ways and avenues to get money, different lenders, right? They're a little bit more flexible on the different programs, rates that they can do. Each person works independently, right? So it's this process where it's not as regulated, obviously, that they have to go through the same process, but they might be able to have different options for you that a normal bank might not. Lastly, you're going to be hearing things like hard money lending. Now, what's hard money lending? This means that this is typically temporary, type of bridge or things for financing that isn't possible through either a bank or a mortgage company, right? And I say that because those banks, mortgage companies take anywhere from 30 to 60 days to close. You might really need a deal closed in the next week or 2. So what you might end up doing is reaching out to these hard money lenders. And these hard money lenders are going to charge you 1 or 2 points up front. What that means is if you're borrowing $100,000, they might charge you that $2,000 to do it. Then they're going to charge you 10%, 12% on interest. Interest only, you're not even paying down your loan. You need to pay it all off within a certain amount of time, maybe 12 months, 6 months. And if you don't, then again, more fees accrue. Your goal is to be able to only use it as that short-term financing till you can get other refinances in place to be able to pay it off. And not the most conventional, it costs quite a bit of money. You have to be very careful with those type of situations. If you don't pay it, they might be able to take your house as well. But at the end of the day, those are the 3 major ways for someone to obtain financing. And there are things like seller's financing as well, but really not that common when it comes down to it. So if you or anyone else you know is looking for a real estate investment agent to be able to guide you through the financing, the different ways, and to be able to make those introductions for you and to be able to guide you for the long term on how to obtain the best financing possible, which helps you become more profitable, please think of Profitable Properties Boston, where we help you go from 1 to wealthy.